Welcome, everyone, and good night. Welcome to the Balie. Very happy to see you all here this Monday evening here for a conversation. I honestly have been looking forward for quite some time, because tonight I have the honor to speak with one of the most influential and brightest economists of our time, Ann Pettifor. And my name is Catharina Schul. I'm an editor here at the Balie, and let me be very honest from the start. Economics, and especially big finance, is really not something I talk about every night. It's not at all my natural habitat. My background is in the humanities. I actually studied Italian language and culture, so it's really not something I have been reading up on for years and years and years. But there's something about Ann Pettifor's writing, that her ability to explain this big architecture and structures and mechanisms of big finance that just makes me understand it. Not only makes me understand it, actually, but even makes me curious. Curious on how did we get this far with this system, but also curious on what this means in my life, like in our daily lives, what I'm paying for a cup of coffee, when I'm trying to buy a house. Focus on trying here, but also renting and everything else that we're trying to afford every day. And it feels like we're in a very particular moment right now, because here in the Netherlands, I feel like there's some curiosity also amongst my friends that is growing on how this is happening, and there's a sense of unease when I'm with family or with friends, where like the government is telling us there's no more money. We need to have budget cuts. We cannot spend a euro more. But at the same time, I see just millions of capital just flowing in and outside of this country, and I don't understand why. And there's this austerity on the one side, and at the other side, this enormous flow of capital just going in and out of this economy. Apparently, I mean, we don't see it, of course. And I think this tension demands an explanation. And that's why I'm so pleased that I not only have Ann Pettifor here for you tonight. I'm also joined by one of the most prominent financial journalists of the Netherlands. Dit is Thomas Bolle. His book, Geld genoeg, maar niet voor jou. Plenty of money, just not for you. Has been, I think, in every bookstore I've been in the past months. It's in the top 10, I was told by Ann today, actually, over dinner. And I think this popularity says something. It signals that there's this broad desire to understand what's going on, what's heaving above us in all of these conflicts and tensions that we have in this society. And at the same time, what do we need to do to change it? Because reading both of their books, The Global Casino and Pettifor's most recent book that we'll be discussing tonight, but also Thomas Bollen's book, it didn't leave me with a sense of powerlessness. Not at all, actually, because they both argue very widely, but very clearly, that this financial system is designed, and what is designed in principle can be redesigned. And that gave me some kind of hope for tonight, and hope in my life. And we don't need to be naive at all tonight. I mean, we are facing some serious trouble, if I'm believing these two thinkers and writers. But there is something we can do about it, and we will discuss this as well. What we're going to do tonight, I'm going to give you, as in Dutch we say, het spoorboekje of the evening. We'll begin with two presentations from both of our speakers, and after that they will join me here on stage for a conversation about how we can better understand this system and focus on how we can change it, and what tools do we have, what kind of mechanisms, what influences can we have. And we will be accompanied by one of the works of Carlijn Kingma, which we'll discuss later on, but I see some of you nodding. Yes, it will be very nice. A few practical notes. This is an event of the Balie. It's live streamed, that's why there's cameras, that's why I'm talking into a microphone. There's definitely room for questions, but leave them at the end, please. I promise I have enough time for questions, but please also note that these questions will also be in the live stream. This program will be approximately 90 minutes, and afterwards, of course, we have a bar, there's drinks, or you can go home. And I think that leaves me with not much more than to introduce to you our key speaker. I think some of you already know who she is, but I'm going to have to say a couple of things before, because I feel like she's already running towards me, but I have a couple of things I need to say about her, because it's really special that she came from the UK today to us. Because Ann Pettifor is a British political economist. Many people say she's best known for accurately predicting the 2008 global financial crisis, but since then she's done so many things. For example, she directs a policy research in macroeconomics called Prime, and she's also a member of the Green New Deal group, which helped shape early thinking about linking financial reform with climate action. And tonight, she is here to discuss her new book, The Global Casino: How Wall Street Gambles with People and the Planet. She's published this like 2 or 3 weeks ago. And I read it like a horror story, but also not really. She unmasks this hidden power behind these big global financial markets, and I've asked her to take us into this global casino. How does it affect us, and what can we do to change it? Give her a big hand of applause. Ann Pettifor.
Gosh, thank you very much, and what a very nice thing to say, and I'm a bit overwhelmed, really. It's wonderful to be here. I was telling people at dinner that I have some heritage here. My father's name was Theodorus Daniel Potgieter, and so my father was an Afrikaner, my mother was English, so I was this mixed up kid. And when I first came to Holland and tried to speak Afrikaans, people were very rude about my pronunciation. But anyway, I feel a strong connection whenever I come here to all of you, so it's a great honor to be here. So I want to talk about this book and what's driven it, what drove me to write it. It's simply that I've been working in this field for some time. I began way back 25 years ago working on the sovereign debt of the poorest countries. And what happened was I was in Africa, Latin America, and parts of Asia, and these countries had built up enormous quantities of debt which weren't payable, and they were in deep difficulties. And we began a campaign which became worldwide called Jubilee 2000, which resulted in about $100 billion in nominal terms of debt being written off for some of the poorest countries in the world. Now, in the year 2000, $100 billion was a lot of money. It isn't a lot of money in today's world. But then it was a big deal. And what that did was it gave me a perspective. I was looking at the world from the perspective of those countries. And I was looking at the financial system, and I sat down. I went to the New Economics Foundation afterwards and worked on a book. And I looked up and I thought, I've been worrying about the fact that these poor countries have got about $500 billion of debt, most of which won't be repaid, and foreign debt in a foreign currency, which is far worse than debt in your own currency. And then I looked up at the Anglo-American economies and I thought, oh my God, they have so much debt, this thing is all going to fall down. And that's when I wrote the book. And that's what I predicted, and sure enough, the thing did implode. So I begin with that perspective. And then I've worked for 25 years on the subject and worked on the consequences of first of all, the dot-com bubble, the crisis of the debts of the poorest countries, and then, of course, the blow-up, because the system blew up at the periphery, first of all, in Africa and Latin America, and then it gradually moved towards the core in 2007-09, when the whole thing blew up. And then that was already, again, when I think about it, that's already 16 years ago. Lots of people here would just have been 8 years old, perhaps, at that time. So it's already history for some people, and yet we've had several crises since then, and we're going to have another one. So looking at the world from that perspective, it just frustrated me that the public seemed to not have an understanding, not just the public, but economists and the media and the public just didn't have an understanding of how we'd got ourselves into this mess. And we just couldn't picture it and understand it. And the practice is normally to focus on the domestic economy, something that's happening here, that's tangible, that's we know about, that's part of what we, where we are. The other economy, which is out there in the stratosphere, is something that is intangible, invisible, and we can't see it. So of course we don't understand it, and there's a very, very clear reason why we don't understand it, and that has to do with political power, or to do with power. Now, economists like to talk about economics as if power is not a factor in economics, but I call myself a political economist. All economists are political because power is central to economics. So is morality, and so is history. But often economists forget both power, morality, and history when they think about economics. And so it's not surprising the public don't fully understand what's going on. So I wanted to call this thing the International Financial and Monetary System, as it's called. I wanted to call it a casino. Others have called it a casino before. I'm not original. But what I wanted to show was that this is a structure. It's an architecture. It's a construction. And we live inside it. And when you talk about it like that, then it becomes something that you can envisage, and that's what I'm hoping will happen if you read the book. But the point is, if you think about this structure, and imagine it is a casino, inside the casino, there are a series of booths, little tents, say big tents and little tents, and those are countries. Here's Britain, there's France, there's Sierra Leone, there's the United States, there's China. And they're all living underneath the casino. And the doors to their tent or their booth is wide open. And the people who are active in the casino, in the International Financial and Monetary System, can come and go through those doors into different countries. They can move their capital in and out without any friction. If they want to trade with each other, there's difficulties with trade. People demand standards, they use tariffs. You get to the border and there's problems, whether or not it meets standards of health and that sort of thing. If you want to travel across borders, if I want to come from London to Amsterdam, I have to go through 2 passport controls, not even just one, right? And this time I had to have a biometric test and I had to be photographed. Getting through those 2 stages was not very pleasant for thousands of people queuing up to get on the Eurostar. If you want to move money across borders, no friction whatsoever. So, I think that's really the point that I want us to understand. We live in the casino, and in the casino, people are dealing in money, and they're moving money around, and they're playing with money, and they're creating new money, and that money can come in and out of our countries without any friction. So if I pay for an Uber fare, so the money from that goes straight through the app and right straight across to Silicon Valley. No stop. There's just no friction in that process. If that driver wanted to go to Silicon Valley, there would be friction all the way till he gets there, right? But not the money. So the key thing about this is that there aren't just people, bankers, financiers, hedge funds, asset management funds, private equity funds, fooling around out there in the system. There aren't just AI oligarchs fooling around out there in the system. There are also drug dealers, mafia, terrorists, money launderers. They're all out there, and they're all coming through the door and out through the door. And we say that's fine. We like that, actually. We like it. Why? Well, it means I can shop at Amazon, and I can buy a Stetson from some American company and have it posted and delivered to my house just by flashing my credit card. It means we can travel easily. It means we can take holidays in exotic places. There's all kinds of advantages that we get from this open door system. But it's the open door system that has led to the criminality of the financial system and to the criminality that we all experience in our daily lives, really. So I want us to understand that this is a construction. This is an architecture that we live within. And it's deeply harmful to our economic prospects. And I'll explain why in a minute. But what we need to understand above all, that we built this construction. This is where I want to come back to the hopeful thing. This is something that we created. Or if we didn't actually build it ourselves, our predecessors did, and they did it with our consent. We agreed to it. Now, I'm very old. I'm sure I'm much older than most people in this room, but I was around in the 1950s and 60s when the doors were closed. I was around in the 50s and 60s where if you went to the bank and asked for a loan, you got a hard time getting a loan. When my husband and I first went, feels like 100 years ago, to raise a mortgage for a house, the bank manager sat us down at great length and asked us all sorts of deep questions about our capacity to repay that loan. When my son wanted to spend £900,000 on a falling down Victorian house in London, he got agreement, more or less, from a voice at the end of a telephone. And of course, there are ways in which they can calculate his creditworthiness and so on. But we've moved from that time where you created money, credit, loans, but it was regulated and it was managed and it had to be used productively to generate income and assets that could be used to repay the loan. And those were the conditions under which the bank would give you a mortgage. Those are the conditions under which a business would get a loan, and so on and so forth. Nowadays, I remember when my children went to university, and this is when the revolution broke, actually, in the early 1980s. Every month, before they had earned a penny of income, the bank would be sending in credit card accounts. We're inviting them to take out credit cards. I had to stop them taking out credit cards. They could have had any number of credit cards because they both went to good universities. They came from a family with a professor of a father. So they were considered a good bet. And they were just throwing credit at them, almost unconditionally, and when they had no income. So that's the world that we live in. And, the scale of credit cards for my sons when they went to university is just tiny. But we live in a world where actually, out there in the casino, there's $500 trillion of financial assets. Now, can't even imagine what 500 trillion. I have difficulty imagining $1 million, right? 500 trillion. And the thing that's really important about the 500 trillion is that the total amount of income that we earn from the total output of the global economy, that's all of the exchanging, the creating, the digging, the growing, the producing that we do, and the outputs from that amounts only to $100 trillion every year, right? So this is excess, it's surplus, but it's also credit, it's also easy money. And it's flushing around in the casino, and it has to be invested. So when you think about it, it's your pensions. I explain in the book that in the 1970s, Chile began to privatize pensions. And Mrs. Thatcher went across and discovered what they were doing and thought about it, and very soon in Britain we privatized pensions. And now our pensions, if those of us who have what are called defined contribution pensions, are channeled into banks and into pension funds, and they are then channeled into asset management funds. And they're channeled into a company called BlackRock, for example, which manages something like $13 trillion of financial assets, of your savings, of your surpluses, of your income. What are they doing with it? Well, they're telling us that they're investing it in oil and gas, because that's hugely profitable, and that'll earn enough money for your pension when you have to come to pay for it. And they're investing it in God knows what else, probably the military industrial complex. They're putting it in places which is going to generate, they hope, income for you in the future. You hope, right? And it's out there, but actually they're also in the process set up what we're calling a shadow banking system. The officials like to call it the non-bank financial system, NBFI, institutions. This is a banking system that operates in the casino, not inside those tents, right? They're in the casino, and they are creating new money. They are creating credit. They are creating easy money, and there's nobody checking on what they're doing. There's no regulation. There's an institution that was set up by Gordon Brown and others after the global financial crisis, and the purpose of that institution was to monitor the shadow banking system and the banking system, and to warn us of crises. So we're doing nothing, we're watching it, we're monitoring it. But they can do what they like, because there's no regulation. We don't know what they're doing. What we do know is that they caused the global financial crisis of 2007-09. They caused another crisis in 2020 around COVID. They caused a crisis when the Silicon Valley Bank collapsed not very long ago. We know that they are creating crises. We also know that even though they're out in the casino and running wild and free, they're also tethered to something called a central bank. The Federal Reserve, the ECB, the Bank of England, the Bank of Japan. They got tied on to it. So come a crisis, come they wake up one morning and their assets don't mean what they think they mean, they don't value what they think they value, all hell breaks loose, and a crisis is precipitated, and the taxpayer-backed central bank, and I want to stress, the power of the central bank is extraordinary, but it's only extraordinary because it's backed by millions of taxpayers. That's income coming into the Treasury and into the central bank every year by law. It's not something that's happening because of transactions or because of the markets. It's something we're lawfully obliged to do. That gives the state enormous power to create money, and that money is being used to bail out the casino several times. And people know this. There are many people who know what are going on, but they don't know macroeconomics. They're not doing a course in macroeconomics. They're not reading the Financial Times, the Wall Street Journal, or Bloomberg. But they know there's something really, really wrong going on. They know that their incomes are stagnating, and that out there the casino's doing extraordinarily well. So the sums are huge, and they really terrify me. Because if you've got financial assets, those are also liabilities. If you're looking after someone's pension, someday you're going to have to pay that pension. If you're looking after an insurance contract, someday you're going to have to pay out that insurance, right? Especially, with climate breakdown. So the point is, those are also liabilities. How are they going to be paid for? Where's the money going to come from? Now, the key thing, and I don't know how much longer I've got, but the key thing about this system is this, that in the shadow banking system, what they're doing is they're exchanging collateral assets for cash. So I've got Mrs. Jones's pension, and it's a lot of money here in my asset management bank, which I call BlackRock. And you have a treasury bill, a US treasury bill, or maybe you have a British gilt or an ECB bond. And you say to me, can I please have some cash, because I want to go and buy an AI company for $100 billion. And I say, yeah, but give me loads of treasury bills, and I will give you the 100 billion. That's how they work, right? Now, the question is, the really big question that they have faced is this collateral. you're promising me that I can give you this cash in return for this collateral. How much is it worth? Well, he thought it was worth more than 100 billion. So, that's why you don't have to worry. Even if I were to default, you would get all your money back. No. The global financial crisis was precipitated in August 2007 when a bank issued a press release which said, we've looked at the assets on our balance sheet and we no longer trust the valuation of those assets. We thought that those collateralized mortgage, collateralized obligations were worth, I don't know, £100,000. Turns out they're worth only £80,000. But in the meantime, we've leveraged additional borrowing against those assets. Oh my God. We're not going to be able to pay those back. But until we've worked out what and now we've got these assets, but we don't want to put them on the market in case we find out that they're worth far less than we thought they were worth. So we freeze the assets and we won't do business. So they just close down. At this point, the ECB, to its eternal credit, was the first central bank to wake up to the crisis. Because the moment this bank froze, all interbank lending froze in August 2007. What's extraordinary to me is that the public as a whole didn't seem to notice that crisis. They didn't see that crisis. They didn't see a crisis until October 2008 when Lehman's went down. But the center of the crisis was the valuation of these assets. Because the fact of the matter is that there's a finite amount of assets in the world. Assets, whatever you want to call them. Whether it's gold or diamonds or whether it's ships or whatever your assets are, there's only a finite amount of it. There's only that much of a planet, the Earth, in the world, right? If you leverage additional borrowing against that, and you find that the valuation of that asset is insufficient relative to your debt, the system blows up. And that's how the system has blown up every time. And now we're in this world of $500 trillion is out there. Only $100 trillion of income and output is down here in the real world. What's going to happen? We don't know. But what I do know is this. Yeah, and what I know is that in 1929, we had the 1929 crash. That was followed by the Great Depression. And that was followed in turn by a catastrophic world war. In fact, we had the gold standard in the 19th century. And there were crises that led up tensions, trade tensions in particular. We had a catastrophic world war and the gold standard was abandoned. And then we end up in 29, crash bomb. In 1933, Roosevelt becomes president of the United States. And he says, I'm going to change the system. I'm going to move the government from Wall Street to my office, my Treasury Secretary's office here in Washington. Wall Street is no longer going to run the economy. And he begins to turn the economy round. Not in time, not perfectly, and there's a war. In 1945, economists come together at Bretton Woods and they say, we can't let that happen, what happened in the 1930s again. And they rebuild the architecture. They have a new architecture. There is no longer a casino. There is managed, regulated money. And they build that system and they have a system for managing trade, for exchange rates. They try their best to build a more stable system. And from 1945 to 1971, when Nixon unilaterally defaults on his obligations to repay debts in gold, at that point the system collapses. And that 45 to 71 is known by all economists on the left and the right as the golden age of economics. Then in 71 we say, let's open the doors again. Let's deregulate. Let's go back to the old ways. And then we've got today is the consequence of that. So we have changed the system and the architecture before, and we can change it again. So I'll stop at that point. Sorry.
Thank you, Anne. I just have one question until I give the floor to Thomas. I just want to know from you, do you feel, because you started with with a lot of history and also with the financial crisis, right, which you rightfully predicted. Do you feel like we're in a completely new era right now, or are we still in the afterflows and ebbs of this financial crisis of 2000?
We haven't recovered from the financial crisis. We haven't recovered from either the great financial crisis or COVID.
Financially speaking, then, or economically?
No, economically speaking, the global economy is stuttering along. It was expanding at this rate, and now it's expanding at this rate. And it's just ticking along, and then periodically it blows up. But we haven't recovered.
All right, well.
But a lot of people have got rich in the meantime.
Not me. I want to give the floor to our other speaker, and I'm going to introduce to you properly as well. This is Thomas Balie. He's a prominent financial journalist and staff writer for Follow the Money, a platform for investigative journalism. He wrote this book, Geld genoeg, maar niet voor jou, Plenty of Money, but just not for you. I read it also a little bit like a horror story as well, but then more on how we make money, get money, produce money, and also who gets to produce this money. He uncovers why wealth is so concentrated while economic systems continue to fuel inequality. And tonight he joins us to discuss these critical issues, shares his perspective on how this money system works, and he will do so also using these cartographies of Caroline Kingma, who made beautiful, immersive paintings and artworks on how immense this production is, and I'm very glad he will discuss this with us and also show us this. Give him a warm hand of applause, Thomas Balie.
Where's the clicker? Ah, here. I take a glass of water because I lost my voice and I couldn't speak for 2 days, but it's back, and I hope I manage to be able to speak till the end of the evening. Yeah. So I was a student when this happened, the collapse of Lehman Brothers, and I didn't really understand what was happening. Unlike who was already in the middle of the financial world, I was just learning about this world, and I wanted to become a banker or an investor or work at an insurance company. And then all these banks were collapsing, and everything that I learned in school and university turned out not to be true, so I was really lost. The thing that happened was a big bank run. Lots of bank runs, people were not trusting the banks anymore, and the government had to step in because we couldn't let the banks go down because we were too dependent on them for payments, for our savings, and that really did not go well with what I learned at school, because I always thought that we had a stable financial system which was being run by the banks and it was being supervised by the central banks, and we had everything under control. And the strange thing was that the banks collapsed, they were saved with public money, but they could keep the profits they made in the time before. It really didn't go well with the theory that if you take risk and you make profit, that you also have to pay for the losses if they materialize. So that was a time to start questioning the system. And you see here a photograph of Anat Admati, who was a scientist at Stanford University, and she was really questioning this whole system, and she was saying, okay, but these banks, they were so leveraged, they were financed by debt. 97% of their financing was debt. And it was just any debt, it was our savings that were financing the bank. And that really started me questioning this financial system. So what is my money? Where is it? I thought it was in the vaults of the banks. I thought it was back with gold, maybe. It turned out not to be true, and that set me on a trip to discover, to read about the financial system, to read about banking. And I talked to Anat in 2024. She came to an exhibition of Carlijn. And she's featuring in one of the chapters of my book as the big star who fought against the banks. And what she wanted to say, okay, banks, you should finance yourself with equity, with the money of shareholders, because if you make a loss, then you have a buffer, and the shareholders have to take the loss, not the people who have an account at your bank. And she was advocating 30% equity buffers. And one of the things that she explained is the language of the banks, because there was heavy lobbying against this, because what the bank said, if we keep 30% equity buffer, then the money will lie here in our vaults doing nothing. And it just doesn't work that way. That's just the way a bank finances itself. It says nothing about the activities of the banks, of the assets of the banks, of the investments. So a bank can still do that, but it's different people who are bearing the risk. It's going to be the shareholders, not the account holders. And that language is a central thing, because the language of finance is very confusing sometimes. And I really like this quote from 2009 of Matt Taibbi. He wrote, "In the age of credit default swaps and collateralized debt obligations, most of us are financial illiterates." I felt like one. And the second part of this quote is also quite important, because he said, if that's the case, then we're transforming a democracy into a two-tiered state, one with the plugged-in financial bureaucrats above and the clueless customers below. That's us. The clueless customers. And that's a problem, because this financial system has a huge influence, as Anne explained, on the way we run our society. And if we are a democracy and we want to stay a democracy, we have to talk about how we want our financial system to work, what kind of values are important, if it's just profit, or if it's other things. And that means we have to be able to discuss this system. So I became a financial journalist. I quit the corporate world, no more financial modeling, but asking difficult questions, because I wanted to improve our levels of financial literacy. They are very low. Even the EU Financial Stability and Integration Review says so. But in this review, they're just talking about the way we Europeans are able to handle our own finances. And what I wanted to discuss is how our financial system works, because that's the more important part, because there's also these greater questions about the way it influences our society. And then 5 years ago, I met Carlijn. She was then drawing another map with Rutger Bregman at the Correspondent. And we started discussing, I was writing a few articles over there, so we started discussing the monetary system. And she said, maybe I should draw a map of that system next. And a year later, she called me, and I embarked on this trip with her. Now I have a relationship with her now, and she's pregnant of her second child. That's why she's not here. But the monetary system brought us together. And we were discussing money in bed. It's a great topic for her conversation. The project started with how are we going to depict our financial system? Because it's important that we start to understand it, but how do you talk about money? Because it's a concept, it's a construct. Now, Carlijn is an architect, so that came in handy. She could draw structures, and structures you can redesign. But we also needed a metaphor, and then we chose money as water as the metaphor. Because if we talk about money, it's all about cash flows, liquidity, it's about freezing assets, it's about trickle-down economies. So the language is already has this metaphor in it. And that's the way we depicted it. And then here you see some sketches and Carlijn drawing. And here's the final work. And what we see is a big tower in the middle. That's our society. That's the real economy. That's where the companies are at the top. And that's where the rich people are at the top. And I will zoom in. And then you can see there are reservoirs with a lot of money. At the bottom, there's less money. The trickling down is not going very well. And then around that, you see a circle, and that's all the financial institutions that play a role in this world. And maybe I can zoom in, because I heard Ann's story, and I think it's nice to show, because we drew this. So here you see what she was talking about. We called it, we have two streams of money flowing, and we called one the steady stream of debt and one the lazy river of investment. And just to show you where we are in the map, need some time to load. You can see the money of the people living here at the top, and they invest the money and it goes through these canals to the back of the map. And there we see the big casino, the great casino that she's talking about. So you can see here, initial public offering, great expectations. Here you can gamble, and there's a lot of selling, buying, initial public offerings. Here, there's a lot of bubbles being blown. Yes, speculation, derivatives, futures, options, swaps. It's sharper in reality, but it takes longer to load. Yeah, this is really zoomed in, because if you zoom out, you can see the rest of the map. And what you see here is, so this is the pension funds. This is how we put money in our pension funds. And then Carlijn and I went with the sketches, also together with Martijn van der Linden, who helped us. And we talked to the people who invest our pensions. And then I said, well, we invest in the economy. But then we asked them, okay, where exactly? And then you zoom in, and you see it's divided into credits, equities, hedge funds, private equity. And because they need to make a 7% return every year, and the economy is not growing at 7%, so they need to invest in things that can extract value from other places. So they invest a lot more in private equity and hedge funds, and you can see Blackstone here and BlackRock that Ann was talking about. And then the money actually flows through these canals to the other side, through the banking system, to all these markets here in the back of the map. Just a demonstration. And there is private equity. So they load up on debt that flows to them through the steady stream of debt, and then they cut up companies. That's what they're doing over here. There's some big scissors. And then they sell the parts for more money, and there's a lot of debt involved because that's the way to pay for it. And the company that is being sold has to pay back the debt, and if they can't, that's their big loss. Yeah, so just to zoom in on this map, there's a lot more, and you can see the animation that we made on this at FTM, Follow the Money /waterwerk. And there's an English version as well on YouTube. Can I go back to the presentation? Because I want to talk about another part of this map as well. So here's the zoom in. You see these big filled reservoirs, nice homes at the top. And there at the bottom, that's where the money doesn't go. And there's the trickle down, and that's just really just a little money trickling down. But what you can also see is these tubes, because there's a lot of money being pumped up in the form of rents and interest to the top of the tower, the people who own the assets, and to the financial system that provided the credit. So even if you own a home, there's a lot of interest payments to the financial sector. So there's more money, and that's why I called my book Plenty of Money. There's more money than ever before, but most of it is not reaching the real economy, not the tower in the middle, but it's going round in those canals, just going through the pipes of the financial sector. Then I have a question. Well, after Ann's discussion, it's already a bit tainted, but who creates our money? I want to see some hands. Who thinks it's the government? Who thinks it's commercial banks? Who thinks it's central banks? Okay. Well, I asked this question a few weeks ago at Rabobank, or a few months ago, and most of them thought that the Dutch National Bank was creating the money. That was not with your introduction. And that's something that happens a lot. But in reality, commercial banks create most of our money. And that is not something that, it's a fact, and it's written down in many documents, but it's not something that is common knowledge. And I still see that when I give presentations on it. And this is 15 years after this big crisis, and it's still not common knowledge. But commercial banks make most of our money, and we have cash money, the banknotes in your wallet. That's the public money. That's being made by the central bank. And then you have bank money, all the rest, the numbers on your bank account. And that is now 90% of our money. So this is the decline of the use of cash through time. And we now use less cash than before because our economy has digitalized. And this is another person who's featuring in my book. It's the central bank president of Spain during the financial crisis. He's called Miguel Fernández Ordóñez. And he confessed to me that he didn't really understand how money creation worked only after he retired from his position as the central bank governor. And he was there in 2008 signing on this new bank regulation. So it shows how deep this misconception of how our money actually works goes. It's also the commercial bankers and even the presidents of central banks who are sometimes confused about how money creation works. And that's why I chose that as the focus of my book. And I follow a few campaigners, so some students in their little student homes asked the same questions as I did when I graduated in 2008. And they started these campaign groups, Positive Money in Switzerland, Volgeld, and here in the Netherlands, Stichting Ons Geld and Stichting Full Reserve. And they wanted to raise awareness of how money creation actually works. I can't go into too much detail, but I described that in my book. They actually wrote letters to commercial banks and to the central bank at that time, asking them, who creates our money? And they got the replies from the bankers, it's not us. So, still happening. These are two of the guys. So that's Ben Dyson from Positive Money. And this was Luc. This is how he looks right now when I interviewed him. So how it actually works is that this is the bank in our drawing. If you go to the bank, you go get a loan, then the bank creates new money. This is the money creation process. And before you can do that, you can see here, it really matters where in the tower you live. Because if you are here at the top, there's some sort of highway, you just walk into the bank, you can get a loan pretty easily. If you go down here, there's a credit check. They look at what you own, what you earn, then you can get a loan. And if you're really at the bottom of the tower, there isn't even a way to get to the bank because you won't get any credit. And you go to Klarna and you buy a TV and pay 12% interest. So that's the way the the structure of this system already exacerbates existing inequalities because the access to the financial system is different. But then there's also, so there's money creation at the bank. So when you go get a loan, a business loan or a mortgage, the bank creates new money, didn't exist before. It's not the money of the savers that is being used. A new number on your account is being created, and the bank also gets a new asset because it's your promise to pay back the loan in the future. And over here, you see some nice symbols of sailing boats. That's the yacht-backed loan. Like we are getting a mortgage. If you're a billionaire, you can go to the bank and get a loan to construct a super yacht and use that as collateral. So we'll discuss that later on. I want to finish it off with this graph. So one of the repercussions of this system, where money creation is in the hands of commercial banks who have been deregulated since the 1980s, they decide where the new money is flowing, and that can really make a big difference. And we see here that this is the line of productive loans to companies who create real stuff in the real economy that we can use. And this is money creation for mortgages. And you see that now most of the money is being created for mortgages. And that means a lot of the new money is flowing not to the productive economy, but to buying up existing homes. And these are the slogans of all our political parties. They all think that expensive houses are a big, big problem. But the central bank already said the correlation is not really between the supply, the lack of supply. Of course, it has an influence, but there's a big correlation with how much money you can borrow to buy homes. So that's where a big driver of our current housing crisis is. These are the two graphs of the correlation. So it shows here, for example, that our shortage of houses was going down between the 90s and 2000s, but you see that the prices of houses were increasing. So here's the correlation between how much you can borrow and how much the prices are going up. And then, can you show my laptop another time? I want to finish with showing the new drawing of Carlijn. This one. Because it's now on display in Brutus in Rotterdam, and it will be in Singer-Laren in the summer. And there's a traveling pavilion going around. This is the machinery of housing. So after the waterworks of money, we got the question, okay, can you maybe draw a new map of how this influences our housing crisis? And that's what we did. So we analyzed the whole problem of housing. And I don't have time to go into detail, but what you see here in the arena is the houses. And in the middle, you see the machinery that is responsible for creating new houses and solving the problem. And I'm just going to zoom in on one part. So, and it does load. So this is what we talk about a lot, how we're going to build new houses. But here you see the financing part. This is where you buy your house and how much you can borrow. And here we see the commercial bank again with its tab of credit creation. And it creates a lot of new money that goes directly to mortgages. And then people take that money out, go here, and go bid for the limited supply of housing and drive up prices. And that is really one of the key drivers of the current crisis.
Thank you very much for this hopeful presentation. No, it is. What really struck me also in just how you now what you did in your presentation, but mostly also in your book, you are following all of these people who are trying to reform, right? You were mentioning a couple of them, and in your book you do this major historical also research and all of the reform moments, also similar to you actually, reform moments we've had in the financial crisis. But you write, I don't know, I think it's in somewhere in your epilogue, you say you're quite frustrated to see there's practically no political debate right now on this financial system at all. Do you have any explanation for that? Why it's so hard to have a political debate, like the people who have to change this mostly?
Yeah. I think the biggest problem is that it's a complex system, and the people who know how the system works mostly benefit from it because they gain the position where the money is flowing to. So they actually keep the language difficult, so most of us don't understand it, and then they are the ones who are being asked when there is a crisis to also solve the problems. And there's a few people who do understand it and then go campaign for the public good, but it's people like Anat Mati or Sol Omarova, who I've followed also in the book. But there are just a few people compared to the amount of people lobbying on the other side. And yeah, the language is a big barrier, so that's why I think we should break through that barrier, because ultimately it is a design, and it's a design question. But yeah, who gets to draw the map of the system? Yeah, that's a big question.
I think it's just a conspiracy. I mean, it's not complicated, it's power. Why would you want people to understand the system? Because if they understood the system, they might rebel or do something to harm your system. So I think there's a grand conspiracy to keep us all ignorant, really.
Well, a conspiracy that they're all together in Davos and just saying, shh, don't tell?
Yeah.
Or
No tell, yeah.
How explicit is this?
I mean, I was very rude about all the conspiracy theories around Epstein. But, you know, I was reading today a piece about how Epstein also brought together a group of intellectuals in a club called Edge around Harvard University. And Larry Summers.
Who's Larry Summers?
Who is Larry Summers? Larry Summers was the US Treasury Secretary under. He was the chief economic advisor to Obama during the great financial. He was the one who said the banks should be bailed out. He was the one who said we should decommodify, we should deregulate the commodities market. You know, this is the big bad guy of economics, and he's hanging out with Mr. Epstein. And I used to say the people who believed they were all a bunch of, you know, pedophile bad guys. I used to think those people were crazy, you know. Now I'm thinking we were crazy because we didn't realize that it is a conspiracy. No, seriously, it's a huge power grab, really. And it's not an accident that, you know, the Queen of England went to the London School of Economics after the crisis. And they were showing her around, because the London School of Economics has been transformed into a real estate company, really. And they were showing her around all the new residences they'd built and everything. And they started talking about the financial crisis. And she turned to them and said, well, why did no one predict this? And the economists were silent. They had no answer. It was incredibly embarrassing. It became a big news story in Britain that the economist said, look, Your Majesty, it's very complicated, But they had no answer to her question. And so they became a laughing stock after the financial crisis.
And that's maybe also caused this, well, I don't know if it has caused this, maybe a sort of disbelief in what economists are predicting, that we don't necessarily take it as truth.
No, yeah.
Well, I'm really trying to take your prediction as truth, actually.
Yeah.
Go ahead.
Yeah, I'm wary to call it a conspiracy because I think it's all about power. It's power politics, but there is an element of just a lot of people in a complex system who don't understand that they are a cog in the machine. So they just see their own part. So, for example, money creation there's no department of money creation in a bank. There's just people who sell the mortgages, and there's another department at the treasury who are managing the balance sheet. And there's nobody seeing this creation process happening and overseeing it, and there's no goal of how much money they create. They just let it happen, and then there's other processes together end up in money creation, and then it flows mostly to mortgages because that's profitable. And it's the most profitable thing because the collateral is really nice, especially if the prices go up.
Maybe elaborate a little bit more on this, because I already see some people collateral. What are you exactly saying with it? Can we make it a little bit more concrete, maybe by linking this to the housing market? Like, how is this affecting us really, or linking us to how our daily bread, what you write about also in your book? Like, how is this affecting us right now that we're not having the power over this money?
The thing is, it comes back to the casino. What we have at the moment is we have big firms like private equity who should really call themselves private debt, and hedge funds who should really call themselves speculative funds because they're not hedging. These huge conglomerates who've already accumulated a certain amount of capital are coming into our countries and buying up whole real estate. Now, when you have all that money coming, and then you have the money coming from mortgages, the banks are being very generous and just spewing out mortgages. And then you have in Britain, we have the bank of mum and dad, where the mum and dad give money towards. So then get all of that money aimed at, again, a finite asset. It pushes up the price of the asset. When there's so much money that wants one thing, with lots of people with the money for it, that goes up. And what the economists are saying, no, it's going up because there's a demand for housing. And we're saying, yes, there is. Of course, there's some demand for housing. But in Britain, we've calculated that there are fewer households than there are residential buildings in Britain across the board, in aggregate terms. Now, not a lot of those houses are in the wrong place. But the fact is, if you totted up the properties against the households, you'd find that there's plenty of housing. The problem isn't the shortage of housing. The problem is the affordability of the housing. People can't afford to buy a housing because the prices have gone up so high. And incomes have stagnated. In the 1970s, when I first took out a mortgage, we had strong trade unions. Our wages were going up. So if your wages are going up with the price of housing, then fine, it works out. But now the reverse is happening. You've money thrown at this finite asset called property, it's going up, and at the same time the incomes here with which to buy that property is falling in real terms or stagnant.
So yeah, if you just take the system, for a bank you create money and you get interest on it. But if the person you give the money to is not able to repay the loan, that's your risk when you do that. So if you create money for a small business that you don't know, that's a risky thing. Maybe he's not that good a businessman, and you have to put in a lot of work to assess that. But if you make money for somebody who's going to buy a house in a market where the prices of houses are just going up, and that's the collateral. That's what you get if the person who borrows the money cannot pay back. That means you get the house, which has gone up in value. So there's no risk for you. So there's a huge incentive to create more money for those purposes. And that's why we are now in this cycle of money creation. Then there's a lot of people who can take out more.
But how is this different from what was happening in the 2000s?
It's
before
the same.
The financial crisis. So it's not.
It's not different. It's the same cycle.
So have you seen the movie The Big Short?
Yes.
Do you remember the scene with the pole dancer? So the banker comes down from Wall Street and says to the pole dancer, she's spinning around and he's scattering dollars at her feet. And he says to her, "Have you got a mortgage?" And she says, "Yeah, of course I've got a mortgage." And he thinks, oh my God, she's got this level of income, and yet she's got a mortgage. And he thinks, oh my God, this is out of balance, there's going to be a crisis. And she said, by the way, she said, I've got 5 mortgages, right? So what had happened was Goldman Sachs, or whoever it was, sold her mortgages. She was very profitable because she was a very great risk. Her income was too low, really, to justify those mortgages. So they charged her 15% on the mortgages. So she just took them out without, really reckoning that she was going to be able to repay those very high rates of interest. There comes a point when the pole dancer can't pay. She stops paying. That mortgage collapses, those 5 mortgages collapse. In the meantime, they've bundled up those mortgages and they're selling them in the global markets as financial assets. Suddenly, this mortgage isn't there anymore. She hasn't paid. This woman's gone. And so, they've lost the value of that collateral. And boom. So in that sense, what's extraordinary about the global financial crisis, it was the poor, it was the pole dancers of the world that brought down what brought down Wall Street.
Do you agree with this view, that it's from lower
That's
up?
the pole
Not the
dancer.
pole now, I mean, from bottom up.
Yeah, that was the subprime, we called it. Because
Yeah,
it
the
was
subprime
people
loans, yeah.
who could not, they already knew that she's probably not going to be able to pay for it.
Yeah.
But then the people who created the money then sold the asset that is created at the same time to someone else. So they didn't even care that she wasn't able to repay in the future because they already made the money because they sold the asset to
But
someone
eventually that blows up.
Yeah.
Thomas, in your book, you write about this moment, which I think is crucial that we address this, because this is all history, even though we're probably still living this. But I want to address what you were also saying about Epstein, and also about a global scene, how intertwined this is with our political governments and our political powers.
Yeah.
You write in your book about this moment 3 days before the official inauguration of Donald Trump, the last time. You write about this crypto ball and what's happening right there. Can you take us there, and why you think this is an important moment to look at when we're looking about the power of money?
Yeah, I think that was a few days before the inauguration of Donald Trump for the second time. He had this big ball, and it was in the Andrew Mellon Center, and that is. Andrew Mellon was, he's a big banker, and he had this big banking dynasty. And his grandson, who inherited his wealth, was the biggest donor of Donald Trump, but later Elon Musk became the biggest one. But before that, it was Andrew Mellon's son. Mm-hmm. So that was a funny fact. So it's this old world of banking which is financing Trump, and then they're having this ball to celebrate his inauguration. And then who does he invite? The other part of his sponsors. So it's the tech billionaires and the cryptocurrency companies that are now popping up. And they are the new private money creators who want to take the place of the banks, or at least be at the table, because now they are cooperating more and more with the banks. So this is the new world of money, sponsoring Trump as well. So he's in there with the bankers, with the crypto companies, and it just shows that if big money can buy the government and control the money, because Donald Trump is giving away control over the American money system to these private players, that is the future that lies ahead of us, also in Europe, if we don't act and put up, take a different course of action.
So Roosevelt famously said, that government by organized money is as bad as government by organized crime. And really, because he had that problem as well. He had the problem of Wall Street basically running the show. Mm-hmm.
I think me, and probably also most of the people in the audience, is really looking for answers here, right? Possible solutions that we can look for when addressing this financial dread. Well, actually, dreading this financial crisis that's upon us, if I'm believing the both of you. I'm just going to pop it up because I've been reading this in the newspapers for quite some time now, but I feel the digital euro is promised to me as some sort of silver bullet, cure for all. It's going to solve some of the insecurities that we have in that. Not everybody agrees. I already saw some people in the audience like, no. It's not this easy. But I'm wondering, how do you look at this? Is this one of these solutions that can help temper this gambling and risks that we have right now?
Okay. Yeah, I have a different observation. First of all, when I see something about the digital
also a lot
euro,
of criticism.
It's mostly a problem or a solution looking for a problem. That's the kind of narrative that I see in the news right now. So it's mostly people accusing the state of designing a China-style super surveillance system where they're using the money to control the people and their spending. So that's the kind of reasoning that I see most.
Maybe you can tell us where we're at right now with this idea of the digital, like where we're at right now and how it's supposed to work.
Yeah, maybe first explain what the digital euro is, because we have digital money already, but there's a big difference. So I explained before, cash money, the notes in your wallet, that's the public money. It's created by the central bank. And because our economy is now more digital than before, we stopped using cash because it's just not very convenient and you cannot pay online using cash. So right now we are all using bank money, which is created by these private institutions. And that creates dependency on the banks, which the banks love because it's great, because that's the reason that governments always have to bail out the banks if they're misbehaving and taking too much risk, because we cannot pay each other without the banks. And it also, because we had to repair the system, so we propped up the system with a lot of government safety nets and guarantees, and that is making sure that the banks can finance themselves cheaper than they would have to do without these safety nets. So for banks, it is very profitable to have this dependency in place. Now, the digital euro would be cash money, so a liability of the central bank, public money, but in a digital form. So it would be suitable to use it in the digital economy. And it would mean that people, if they can, take money out of their bank accounts and put it on the safe bank account with the central bank. If that happens, the banks will have a funding gap and they will have to find new funders, and they probably have to pay them more than that they are paying you on your accounts. So for them, there's this lobby against it.
Not a lot of incentive for commercial banks to participate in this.
And the thing is, if you have this a digital public form of money, it would basically mean there is a public payment system and a public alternative for bank accounts, and that would kind of give them less control over our governments if crisis happens. So it is leverage for the public sector to say, okay, we have something public and we're not fully dependent on you guys. So it's rebalancing the tilted balance that we have right now, where public money has declined in use so much that we are using banks all the time.
What's your observation on this?
I think it's a complicated idea, and I'm not personally sure of it. I'm not against the banks playing a role of distributing credit. I mean, the way the system works is that the initial credit comes from the central bank, which is the foundational power of the financial system. And they allocate how much the private commercial banks can distribute in the form of credit. They also effectively decide how much the state can use as credit. The question then becomes really, how do the banks disperse that credit, and on what conditions and terms? And at the moment, it's unconditional. You know, we've given the banks, you know, freedom to do as they please, really. And if they want to make crazy loans that are unsustainable, the central bank doesn't intervene anymore. They leave it to the market, so they're called. So I think we were always going to need a sort of intermediary between the public central bank and the public and the commercial banks should play that role. My problem is that the commercial banks are given that power by the central bank, but it's unconditional on the whole, and it's without regulation. So when you think about what happened after the great financial crisis, we bailed out the banks, but we didn't set any terms and conditions. We said, oh, we're going to replenish the capital that you've lost. We're going to infuse capital into the banks. And they did the same thing during COVID. 70 billion pounds was printed, or it wasn't printed, but was issued by the Bank of England. And that went into the banks. It also went into the financial system, into asset management funds and that sort of thing. And people got incredibly rich out of it. I mean, the value of yachts that were sold over that period, the degree of wealth that was accumulated immediately after COVID was extraordinary. So for me, the really important thing is that the public institution that is the central bank should use its power to say, yes, we will give you credit. We would like you to manage the allocation of credit to society. Does Mr. Jones need a loan for a new car? And does Mrs. Smith want to, a mortgage? Or will you please play that role? That shouldn't be played by civil servants, right? But there should be conditions and terms that the banks should do it, and they should only, for example, make loans available for productive purposes, not for speculation. Now, Thomas was rightly pointing out how the banks prefer to invest money in mortgages. That's speculation. That's speculating that house prices are going to rise forever. And we know that house prices are not going to rise forever. There'll come a moment when house prices will start to fall, right? In the way that crypto, for example, is falling at the moment. So they are now choosing the easy option of channeling credit into mortgages. And I think the central bank should say, no, we're giving you the power to create credit, but you're not allowed to put it into speculative activity, such as mortgages. We want to see you put it into productive activity. We don't give those terms and conditions. And, to come back to your question about how do we deal with this crisis, I think sorting out the system is going to be incredibly difficult. And it's going to require international coordination, and it's going to be a whole new Bretton Woods system. But there are some very simple things we could do straight away. First of all, the state has enormous power. It can say, we will bail you out, or we won't bail you out. We will bail you out, but thou shalt lend money into the real economy. He didn't say that. So the banks chose to lend money to Elon Musk, for example, into crazy projects that we don't know whether are sustainable. So that was unconditional. We should say to them, and one of the very simplest ways we could act is to not do anything. So these banks rely on the public institution that is the criminal justice system, the courts, the contractual arrangements that we make in the courts, that is financed by taxpayers. It's a public, not a private institutions. We should say to them, you can't come to our courts to confirm your contract. We're not going to uphold your contract for you. If you want to sign a contract for a speculative activity, please go ahead, take the risk. But we, the court, will not uphold your contract for you.
Has this happened so far, anywhere?
No, but we could do it. So the point is, we know, in the old days, that the banks did refuse to compensate people who speculated rather than... So farmers always have to hedge against their harvests to make sure that they have to make provision. Like, you take insurance out on your house. That's a form of hedging. You're doing that in a socially responsible way. You're you're assessing the risks, and so you're taking out insurance. The banks will, but if you take money out to gamble on crypto, why should you be bailed out? No, you took that risk. You must face the discipline of that loss. But equally, you know, we could say we are withholding contracts and the upholding of contracts that we consider to be fraudulent, speculative, whatever. We just fold our arms and leave them to agree amongst themselves they're going to lend money. So there are simple things we could do in the very short term to bring these guys back down to earth. But then there's the big question of how we restructure this whole international financial architecture, the way they did in 1945, the way President Nixon did in 1971, when overnight he just dismantled it. You know, we can rebuild the structure, but that will take a lot of time and it'll be very tedious. But in the meantime, there are simple things we could do which would frighten them the hell out of them. If they couldn't have their, so it makes me particularly angry because we taxpayers in Britain, and you do it here in Holland, we sustain the criminal justice system. You can walk down the street safely. If you lived in Moscow, you couldn't be sure that you weren't going to be shot in the head as you walked, or kidnapped or whatever. You know, we have a process for managing your divorces. We have processes for managing your contracts, and that's all in the public sector. And these Russian oligarchs and these billionaires from Nigeria or from China come to London to get their contracts sorted, to sort out their divorces, to buy properties so that they can send their children to Oxford University, but they can be safe. They can walk out on the street and not be assaulted because we have a criminal justice system that works. And we, the taxpayers, provide that.
Well, we need the criminal justice system to also sort out our financial criminals, I'm saying.
But I'm saying is that we, the public, should be saying, we're not going to provide those services to these guys. Why should we use our taxpayers' monies and our institutions to support them unconditionally? So, you know, I'm sorry, I didn't mean to rant about it.
That's fine. We invited you also.
You can tell I'm ranting.
Can I show something on the map?
Yeah, of course. Go ahead.
For
I just want to say shortly to the audience, we'll come to questions quite shortly. So if you have something, just keep your brains on, and then we'll get to the questions in just a little bit.
So I think because it's so complicated, but we have this map, then maybe it becomes a little... So this was the commercial bank. And what Anne was talking about was the central bank, who also has this first basic layer of money creation. So I was saying, okay, actually this money creation, the public money creation, should be more important than this private institution. So after the crisis of 2008, we had these programs, and the central bank was creating more money. But, and then you have to follow the pipes. You see, they can create money, but then it doesn't flow to the tower of the real economy, because there's no, these pipes don't go there, and there's one pipe here which says monetary financing. That's forbidden. So the thing, and there's another one, helicopter money, because they were trying to stimulate the economy. So the easiest way to stimulate the economy would be, and the most effective, that's something that everybody agrees on, would be to use helicopter money, and that would mean give everybody 500 euros, and then they can spend it, and then we get demand in the economy. So that was the idea, that's what they wanted to accomplish. But this helicopter here has a chain, so it cannot fly. It couldn't go anywhere. So instead, they had to use this pipe, and that goes to the banking sector, because that's the ones who are connected to the central bank. So all the money that they created went into the reserve account here of the banks at the central banks. And then the central bankers could only hope that the banks in their turn would create bank money for the rest of us to invest in the economy, set up a new shop, build a factory and create jobs, so everybody would have more to spend. But instead, they provided loans here in the back and just going to the financial sector here for the speculation and the derivatives and blowing bubbles in the air. So stock prices went up, house prices went up, everything went up, and that's what was happening here in the back. But money wasn't actually reaching the society. So what they then did was buying up, there's another pipe here, that was the asset purchase program, and they would actually buy up. There's somewhere they're walking with this money. Well, anyway, they were buying up the bonds of these big corporations. And then we drew one in particular, this corporation called Louis Vuitton Moet Hennessy. You all know that from the Champagne Tower over here?
Yeah.
And the idea was, well, if we buy up the corporate bonds, then they will invest in the real economy and set up a new champagne bottle factory or something like that. And it would work like the Champagne Tower. You would pour in the champagne at the top, and then all the glasses will fill up, and actually they trickle down, and then in the end, also the glasses at the bottom would fill up. But what the shareholder of Louis Vuitton, Mr. Bernard Arnault, the richest man of Europe and always in the top 10 in the world, he actually takes out the glass at the top, he drinks it and puts it back for a refill. And that's what in reality happened. So what he did with the money was pay dividends to the shareholders, of which his family owns more than 50% of the shares. He would buy up his own stocks at the stock market with the money, so the stock prices would go up, and then also the shareholders would profit. And he used the money to buy up competitors. So he was actually creating more of a monopoly, oligopoly, and controlling more of the market. So that's what actually happened. Now, with the digital euro, we would all have an account at the central bank, and that would mean that the chain of this helicopter would be taken off. Because if we all have an account there, it would become much easier to give everybody, for example, 500 euros, and you don't have to apply the same logic that we used in this period before.
Because it's not being gambled on, it's not being...
Yeah. But it would be a political decision, though. It would not be something that the central bank can do, because these are not politicians. So it should be a political decision. And then again, we need to discuss this in our parliaments. Before this can happen, it needs to be a topic, and we cannot let the bankers and the central bankers decide on this.
Absolutely.
You completely agree?
Yeah. No, I think
so this is a pro for the digital euro.
Yeah. Right.
Well, with some... I think I want to grant some time for some questions from the audience. I have so many, but there's no time. Can I just see? Yes, in the back, in the front. I'm going to start in the front, and there in the front as well. Hi, I'm coming to you.
Hi, hello. You were talking about the fact that we need to apply pressure, political pressure, and have the money directed towards productive purposes. But there is a lot of money going towards the tech sector, and particularly AI development. And what will happen if that turns out to be a speculative purpose, and the AI cannot fulfill the promise of production growth and productivity growth?
Thank you for the question, Anne.
Yeah, well, there's always been, entrepreneurs coming up with the big idea. For example, let's build railway lines, or let's build the internet. There's always been capitalists who've had big ideas and to sell us something, and have asked for money to develop it. But those things have been fairly tangible, even the internet. The horror of AI, and in particular of AGI, is that it doesn't yet exist, actually. So here we are throwing $5 trillion at NVIDIA, and another $600 billion is going to be spent this year on new data centers. And we still don't know what's going to come out of it, really. And so at the moment, it feels very much like a bubble, as you say. It feels like frenzied bubble, really. because there isn't yet anything to show for it. And the terrifying thing is they know that that there won't be revenues coming from it, because they're now beginning. Yes, this last week or two, Sam Altman has said they're now going to start advertising to people using AI. That means they're having to raise income from advertising. And that's pretty horrifying when you think how much those advertisers will have access to some very important and very personal data, which AI is currently scooping up from everybody. So, you know, the fact that they're having to bring in advertising means that they know they don't have an income stream. So they're looking for this as an income stream. They don't have they're not confident that the thing itself is going to generate enough income to pay for all those hundreds of billions of dollars they're spending on data centers. So yeah, it's a big worry. You know, just to cheer you up.
Nothing to do about it. Hello, sir.
Hi.
Okay.
Maybe there's a misunderstanding by me, but in the first of all, you are talking about the 100 trillion all around the world and the 500 trillion all around the world. And if I understand it well, most of it, we were talking about the 100 trillion. What about this leverage up about 500 trillion?
Yeah.
And has it something to do with opening up the financial markets, international financial markets in 1989, I guess? Everything was deregulated and financial flows all around the world.
Just checking in with my speakers if you are understanding this question, and can you translate it?
So the 100 trillion is the consequence of real economic activity in the real world. It's the total of income and output every year.
I know.
100, 110.
Yeah, I know.
500 trillion is money is surplus in some cases, but also is credit, new money, easy money. We don't really know quite what's being done with it. We know it's being invested. Quite often they are companies investing in each other. But the point is that this is not something we really know or understand, because because these companies hold so much of the world's savings, so much cash, they can't put it in a normal commercial bank, right?
So halfway, both curves, the 500 trillion was the curve crossed the other one. So first it was below. And now the curve is.
Oh, that was my graph,
Balie,
right?
That was the mortgage. The mortgage.
Yeah.
So more money is going to mortgages than to productive investment.
Oh, yeah. Okay.
Yeah.
But also to combine it, just the tech investment, for example, that's all on the promise that it will generate income streams in the future. And if it doesn't happen, and we start to say, okay, maybe it's not that valuable, then we need to devalue the assets of these financial institutions who have provided these loans.
Yeah.
And that means somebody has to take a loss.
Yeah.
And who's that going to be? If they are still financed with 3% equity, it's going to be the people who have their money at the bank and who are financing
99% probably.
What the bank is doing.
Elon Musk has made huge sums of money himself, but he paid crazy money for Twitter. And he's now merged his space company with his Twitter company and his AI company, basically to help pay for the Twitter debt, right?
Yeah, because
and then next summer, he's going to go public. He's going to ask all the little people to buy shares in his company, because he needs that money, because he hasn't got enough money. And those people are going to put their precious savings, they're going to buy shares in Elon Musk's business, right? But why is he asking why is he going public? Because he doesn't have enough money, because he's not confident he's going to generate enough money to pay back his debts. And so he's now broadening the base of money that he can suck up into his company.
And then there comes in power. But, I mean, it's not happening. But there would be the choice to invest or not to invest.
Yeah,
and if we would
exactly.
I'm not really at liberty to invest. But people could be saying no.
Exactly.
Right?
Yeah.
Of course.
But that's not happening,
So
I'm assuming.
But the hype is such that they probably won't.
Yeah, but then this is the part that I have little problem with. If you want to buy shares in Twitter, okay, that's your money, you're going to do it. The part that I have a big problem with is the part that has already happened, that the banks have created 13 billion new money, new dollars. They gave that to Elon Musk, and then he could buy Twitter with that money. So that's where the damage was already done. That was money creation for purposes of Elon Musk buying Twitter. And that's, to me, is a terrible destination for new money creation. And that's why we need to have a discussion of where the credit is going to. And it should not be billionaires who then leverage up and then buy other companies. That's really a terrible destination.
Yeah.
Questions, sir?
Yes, thank you very much. It's good that you say that we can change the system. And you say the politics is essential for that. Thomas says in his book, both right-wing and left-wing politicians should be willing to change it. But he says also most of the parties don't have a vision on it and are not concerned and certainly don't have a strategy. No. How do you see this, and what is the situation in England? And I would also like to know what in Europe as general, as a whole,
can do. Right.
On the political level.
Yeah.
How can we raise awareness and change the system?
It's really hard. I mean, it's pretty grim in England because we've privatized everything. But huge sectors of our economy have been privatized. And our politicians used to have power over those sectors. Like the water companies. We used to own the water companies, and the politicians managed it. And they managed it much better than the private sector. We've now got a crisis with private water companies. But that power was taken away from our politicians. I'm just being crude here. But in the 1950s, 60s, say, and early 70s, they had those powers. But by privatizing all of the state's assets, you strip them of powers. And now they're sitting in the House of Commons. They've got nothing much to do. They're not in control of any of these sectors. We're at risk at the moment. The one area they are in control of is our National Health Service. But, Palantir and the private sector, they're chipping away, they're trying to take hold of the. But the point I'm trying to make is that our politicians now lack power. They lack economic power over the system. So that's one problem. The other problem is the problem of ignorance and the problem of, not understanding, really. And and we're trying to, in my very humble way, trying to do something about that. But there's another problem is as a result of that, we don't have leaders. There isn't leadership. You need someone strong to say something.
Who will be the leader? Does it need to be a political person? Or are we saying we want just a very firm, but that will be technocratical leader of a central bank? Who is taking leadership here?
No, I mean, I think the central bank is an incredibly powerful institution. And it's a public institution. In Britain, we nationalized the Bank of England in 1945 because in the 1930s, the governor of the Bank of England was corrupt. And it caused a lot of problems and didn't manage the system, so it was nationalized. So we own that bank. And that bank should be responsive to society as a whole, to the democracy. One of the reasons why we have the right, the rise of the far right, is that people believe that there is no power anymore. They can't do anything about anything. That we have a sense of helplessness. We we are helpless, really, and people are angry about that. Because the power of the central bank hasn't been used to empower the rest of us. It's been used for the 1%, essentially, for the capital markets. And so that's fostered, if you like, disillusionment and anger and in the public. Sorry, I don't have a cheerful answer to your question. Can I just say that, Rosa Luxemburg said that revolution wasn't about pulling down buildings and murdering and catastrophe. It was about transformation, and people bring about transformation. And how do they do that? They do that first by education, mass education, mass understanding, and then by action, and then they change things. And I have, through my lifetime, watched as society has changed whole swathes of social and economic activity, and we've done it as the public, and we can do this again. And I just give you a simple example. When I first moved to London, sorry to keep you for a minute, people used to smoke on the underground. It was terrible. You'd go into the coaches on the underground and you'd be suffocated in smoke, right? And then we learnt slowly that smoking causes cancer and is not good for us. The tobacco companies tried to hide that intelligence, hide that information, but it began to leak out, and eventually we all understood. And gradually society, having an understanding about smoking and cancer, then says, change the law so that people can't smoke on the underground. And if you go there today, there is no smoking on the underground, and we breathe clean air. And that's the process of society understanding, and then demanding action, and then law, and then transformation. And it can happen again.
We're going to go to a final question. Thank you. This is the last question, so big pressure.
Thank you. Actually, my question is much around the last point you made, and that's that I think in democracy, regulation is the only way to forward anything that you want.
Yeah.
That's how the society works. And also, since 2007, regulation in the financial system has changed a lot.
Sir,
right?
I have to make sure you address the question.
Yeah. So my question is, what are the 2 or 3 things that you think we should change to regulate the financial system better?
Good. I think it's your last chapter.
It's a big question, and it's the best question from my point of view. because for me, there's one really important regulation, was we must manage the flow of borders, of capital across borders. And I want to explain what that means. You all know about Ryanair and O'Leary, the owner of Ryanair. Well, Elon Musk's announced he's going to buy Ryanair because he doesn't like Mr. O'Leary, and they have some stupid... And the EU Commission intervenes and says, no, we have a law here that foreign banks or foreign institutes cannot buy European airlines. Sorry, Mr. Musk. That's capital controls. That's saying that capital cannot come in and grab our asset, which is an airline. In Britain, even though we're the most open and the most liberal of economies, when house prices did go up, dear old Mark Carney, who was the governor of the Bank of England at the time, introduced a new, they call it macroprudential reforms, essentially. He said that if foreigners want to buy a property in London, they have to put down a bigger deposit than local people have to. That was a form of capital control. The money stopped coming across the borders and buying up property. For me, that's the most important regulation. And it doesn't mean to say you stop all money or you control all flows of capital. It means you manage the flow of capital across your borders. And at the moment, the ideology is that you must allow the casino to come and go just exactly as it likes. So that, for me, would be the most important change. And then the next important change would be for the public sector to say, we're not going to enforce your contracts. Tough. Is that an answer?
Would you like to add something to one of these? Great question, last question, actually. What can change?
I think it would be a good idea to talk about capital controls, but that's really not in the picture. If you talk about politicians or central bankers or people in the financial sector, that would be like blasphemous.
It is blasphemous. But Elon Musk was stopped from buying Ryanair.
So it's possible.
It's possible. Yeah. But we need to change the narrative and talk about have these really fresh perspective, and actually most of these fresh perspectives can be taken from the past, because we actually had a lot of these systems in place in the past, and I think that's a big lesson. If you look at other eras, we had different systems which work differently, but somehow we tend to really forget that, and then we are stuck in the system and the way it operates right now, and then we all believe that is the only system that we can have, and we really believe these stories of that it's a fair and just system, and we all want to believe it. Somehow we are all in this tower, and on a world scale we are in a good position, and we can look down, and we certainly don't want to fall, and we all want to be in that chamber a little higher up, and I think that is one of the big problems, that most of us see ourselves in that house at the top, and we want to aspire to climb up instead of changing the tower into a different architecture, and there lies the big challenge, because we need to discuss.
So that starts also from within, is what you're saying.
Yeah, and challenge the narratives, and also most of us are suckers. We believe the story, and we also believe that we are the hero in the story, and that was somehow, at some point, we will end up there at the top. But most of us will not, and the system is not working in our benefit. And it's certainly, if it works in your benefit, there's a downside to it, that other people are on the bad side of this deal. And I think if we realize that, then we can definitely construct a better structure which can create more prosperity for more people, I think. Yeah, it's truly possible.
Mechanism never will change.
A person in the audience says, I'm afraid the mechanism will never change. But I think one step that we can take is continue to have conversations and to continue to come together. Exactly. I need to say this because I work at the Balie and I want you to come back. It's time for me to close up. I want to thank everyone for coming, but of course, I want to say, please buy these books, because if you want to know all of the ways reform has already existed, Thomas gives a big research, and if you want to know what the global casino is and how we're losing badly, but also what you can do about it, you should really, really, really buy and read Ann Pettifor's book. You can also follow them on all kinds of social media and become really rich, and everything is free in your Substack. Rich in your head, in your mind, I mean, enriched, which is another kind of wealth. And I also want to say that the maps that we saw today of Carlijn Kingma, Fear of Falling, her exhibition is also at Brutus Rotterdam until the 8th of March, and I can also really, really, really recommend to see them live, because it will be even more big and nice to see. Can you please help me in giving a warm hand of applause to my two speakers, Ann Pettifor and Thomas?
You can buy the book here, right? The books are here. We're going to sign.
And the books are for sale in our foyer.
We're going to sign them.
You're going to sign?
Yay.
Okay.